the action in fintech has shifted from the unbanked to the unbrokered. That's a really big theme that is going to be front and center for the next 10 years. There's one scenario which I think is probable, that agentic commerce is going to be bigger than like human-driven commerce in the future.
Hi, folks. Welcome back to On Call with Insignia, where we go on call with leaders innovating the future of Southeast Asia's internet and digital economy, or as we like to call it, Asia Innovation. I'm your host, Paolo Aquino. You have a very special episode live from Insignia Ventures Partners office in Singapore, where I have my colleague, Vice President of Strategic Development and Operations, Alan Chng, interviewing the Coinbase Singapore Country Director, Hassan Ahmed. Let's get into the conversation.
Today we have a guest with us here today who is probably one of the most insightful, operating in the intersection of payments, infrastructure, stablecoins in the region. And we've been watching what's happening in digital assets now, that we have moved on the Web3 side, moved from the speculative fringe towards a lot of big regulatory frameworks, right? You have Genius in the US, you have MiCA in Europe. Over here in Asia, you have regulatory frameworks in Singapore and Hong Kong as well. And I think a lot of it in the Web3 is also moving institutional, right? Especially a lot of Wall Street adopting it. So my guest here today, he has sat through different eras of financial services, starting from Merrill Lynch to Venmo in the US, and then he moved to Southeast Asia, where today he leads Coinbase's Singapore operations. And then he's also someone who rigorously thinks about the future of where money is heading towards. Please let me welcome Hassan Ahmed, Singapore Country Director of Coinbase. Welcome, Hassan.
Thank you for having me.
So let's just jump right into it, right? And perhaps to set the tone of the conversation here, because I think, as I alluded to in my intro, you have quite a, storied career within many areas of financial services. And would love to get your views specifically on payments, how it has evolved over the years as you've taken different leadership roles, and how have these payment innovations shaped your career?
Yeah, that's a great question. My team jokes with me that I've built 3 different generations of money, and I've been fortunate to kind of see these different waves across financial services and payments in particular. Started out my career in traditional finance, was at Merrill Lynch Wealth Management for a while, at Credit Suisse. So got a taste of how traditional finance legacy institutions are set up and how they've scaled over time. And then I got antsy from there and really moved my career towards fintech, and was fortunate to get a role with Venmo, and this was post PayPal acquisition. I think that's where I had my first sort of realization that one, financial services, especially for consumers, was moving to this construct of financial experiences, where this is, if you rewind back in the day, this is when Uber was starting to break out and everyone was making these comparisons. Well, my Uber app works this way, but my Chase banking app still functions this way, or even most banks don't even have an app at that time. And when Venmo came along, it really was this breakthrough from an experience perspective, where it made something as simple as domestic peer-to-peer payments instant, free for the consumer. And it added this layer of delight on top, where you could add like a payment note, you could add emojis, it had a whole kind of social angle to it. So that's what allowed for that breakthrough to happen from a product market fit perspective. And frankly, it was like the only consumer payments breakout over the last 10 years in the US when it happened. So that was very eye-opening for me, for where the consumer expectations and the bar had moved to, and what eventually all financial services providers would have to move toward. At the same time, after spending a few years at Venmo, my other kind of key insight and realization was that even though the experience layer had moved up, ultimately, though, it was all pretty much a wrapper around like legacy rails and legacy settlement systems, because all of the fintech experiences, especially in the US, they sit atop of some bank where all the custody happens, where all the settlement happens. And those pipes are basically those same COBOL run machines and EDL pipelines and all that good stuff. So I think that's where, when I came across the Bitcoin white paper and I really started like looking into this technology, it became clear and clear to me that while the front end was evolving, this would be a solution to the back end of financial plumbing, and providing this tech-enabled, internet-native ledger that didn't really need intermediaries, that could be instant and global from day one. That was, I think, a huge R&D breakthrough, a computer science breakthrough, and really a gift to the world from Satoshi Nakamoto of, look, this is something that we can all adopt and as open source, and we can go ahead with it. That said, it took a long time for that R&D to become a technology, to become a product, to really start getting into the mainstream. And that's where we are today.
really love how you said how fintech moves things towards from a point of view of customer centricity. And then also the interesting thing that you said there is that when we first started, you have your communication layer that moves very far, but your settlement layer probably needs to move across multiple correspondent banks anytime you need to do a transaction. And that, in the end of the day, that also creates some customer frustration at points in time. But I think we are moving very fast now, right? And the thing with many of such evolutions is it does take time for the right regulatory framework to be in place, the right institutional adoption to come into place, the right trust, right? But when it takes off, it can be pretty fast, right? And as is what we are seeing today, right? And then maybe we segue into something that, a trend that we've been seeing quite a lot now, in a sense where I think Bitcoin started out as like a digital gold thesis. And now, and people used to correlate a lot of the Web3 side with, speculative digital gold, store of value. But I think a big macro shift that's been happening around recently is stablecoin utility, as well as this whole movement starting in the US, I would say, maybe, towards tokenization. So we'd love to get your thoughts. How do you see recent developments on partnerships between Wall Street institutions and Coinbase? How is that impacting stablecoin momentum and adoption, at least from what you see here in Singapore and the broader Southeast Asian market?
Yeah, it's been a very transformative cycle for crypto, I would say, the whole industry. So I think in the last 4 years or so, whilst there was a lot that was going on in terms of just cleansing out and purging the industry, actually behind the scenes, there was a ton of work that was being done both on the technology scaling side. So today, blockchains are much more performant than they were a few years ago. So if you recall, like back in up till 2021, people would be concerned about, hey, Ethereum is the main kind of layer one for smart contracts, and it taps out at 13 transactions per second. And if there's this NFT mint and gas fees are going to spike to $80, no one talks about that anymore, right? At Base, which is our layer 2, or Solana, which is a high performance layer 1, we've increased throughput to call it like roughly about like 50% of like where Visa scale is today. So transactions that are under 1 second, under 1 cent are very commonplace, and that's still continuing to improve. So I think that's one big unlock that the industry has achieved over the last few years. The second kind of big change that's happened is just the regulatory posture. In the US was sort of really the main, I would say, inhibitor in terms of regulatory choke point. There was a whole regime of regulation by enforcement. That's a bad dream at this point. It's all withered away. The new sort of posture is very much, hey, let's make sure there's clear rules of the road. Let's make sure that not only are we just providing regulatory baselines, but how is the US going to be a leader in both crypto and AI? And they're taking a lot of pro-business and pro-innovation initiatives to achieve those outcomes. So I think with that backdrop, what I would say the big kind of headline here is that the industry has matured. And that's evidenced by all of these institutions that have moved towards digital assets and stablecoins. Our partnership with BlackRock, when they announced their ETFs, for example, like that was a big like coming out moment for all of crypto. Those ETFs were like Bitcoin's like IPO in some ways because it provided this bridge from what was traditionally maybe like a crypto native pool of capital bridged over to traditional pools of capital. So I think we've seen a lot of adoption and uptake. If you just look at the ETF products, those are for Bitcoin, like those are the most successful ETFs that have been launched in BlackRock's history. Beyond that, like we're seeing banks started jumping head first. So the Genius Act was a huge catalyst, especially for stablecoins in the US. It's funny now, like every bank has some sort of a stablecoin program. And what's nice about it is that it's not just announcements and pilots, they're actually moving it into production because they understand the size of the prize is now big enough that it can actually move the needle for them as well.
Actually, I like what you particularly said in your first cut on how the technology has stabilized and moved such that you have massively increased the speed and reliability of such transactions. Right? Because if I recall during COVID, when we were all sitting at homes, nothing to do, I was going deep into the initial phase of the DeFi world. And I remember the times when the gas fees really do spike and you literally have to wait in front of the computer and wait and maybe come back like maybe a couple of hours later, hopefully come back at a better time so that we don't pay exorbitant gas fees. And I think the state where we are at right now is probably testament to what Coinbase is building as well with what you have with Base. And then, of course, building the institutional layer kind of trust. The more people read about what's happening with BlackRock and those names you mentioned, the more it becomes mainstream
That's
and
right.
less of a niche kind of thing, which is so important.
That's exactly right. I think the old mental model that people had was that the crypto economy was
Yeah.
here and traditional finance
Yeah.
was here. The reality today is that those two have really intersected
Yeah.
and collided with accelerating pace. And so now it's really these big institutions that are the ones that are really
Yeah.
propagating for digital assets. So the conversation and the tenor has really changed.
Yeah, it's a bit like the internet era, right? You used to have the traditional era and internet era, but today is one digital world that, of course, is very similar as we move online to offline. But I think it's a similar paradigm, but
Yeah.
in fintech.
One way to think about it is that, these are these big technology waves that come and they
Yeah.
reshape these industries, and everyone has a choice whether they're going to adopt or not adopt,
Yeah.
whether they're going to win or lose. So to be fair, for financial services, regulations is a huge baseline. You have to have regulatory confidence that, look, if I adopt this, if I invest in this area, I'm not going to risk the rest of my core franchise. So I think that's why Genius is such a landmark bill. And we're hopeful that Clarity Act in the US will pass as well.
Yeah.
We could talk about this part of the world, which
Yeah.
which actually has had regulatory clarity for a long time.
That's a good segue, right? Since we're talking about regulatory frameworks, regulatory architecture, and I think usually the retail follows institutional and what's going mainstream, and that also follows regulatory positioning, regulatory posture. And I think what's interesting then now is how Singapore has positioned itself, and we've been early movers in the regulatory frameworks as well. Perhaps to dive a bit deeper into this is, what role did Singapore play in particular for Coinbase Asia to kind of set up your presence here and also push a lot of the things that you're doing for the region through Singapore in the context of tokenized assets or other contexts as well?
So Singapore has been very smart in terms of thinking long term, in terms of having this fantastic infrastructure, both physical but also legal infrastructure that is very pro-business, and the government just performs at a very high level in terms of thinking ahead, mapping policy objectives, and then also implementing and executing against those objectives. This is an open economy and it's a big financial hub. I would say that maybe in the late 90s up to like early 2000s, there was a huge sort of movement around like Singapore being a fintech hub. And then within that, when the Digital Payment Services Act was announced in 2019, there was a specific substrate in there about digital payment tokens. And what that effectively did was recognize crypto in a kind of legally classified way. And again, provide clear the rules of the road for industry players for, hey, if I want to provide crypto-related services in the market, this is what I need to follow. This is the kind of license I have to apply for. And these are going to be my supervisory obligations going forward. So if you rewind back the clock a few years, the US had a very hostile approach towards crypto and they were trying to drive it offshore, frankly. So against that backdrop, Coinbase is a global company, and it just made a lot of sense for Coinbase to also think about, okay, if we were to set up like different hubs around the world, what would some of those be? We already had an office in the UK. We actually are the leading player in the UK. And Singapore just made a lot of sense to be the Asia hub. We knew we were going to enter Asia at some point, so that felt like the right timing. And once the licensing regime was announced, I think it further cemented our belief that this was going to be a good hub to operate out of.
Actually, which brings to a point, right, where I always think that people say that maybe rules restrict innovation. But actually, in certain cases, when you have clearer frameworks, clearer boundaries, actually encourages innovation because people know where are the areas that we can push off. Perhaps if you have a sort of sandbox regime in which to test out new innovations, and that's what really drives a lot of the new push. And I think that, for example, the MAS recently has this Bloom initiative as well, which I think is encouraging a lot of cross-sector, cross-private sector collaborations.
We're fortunate that since I started the office here about 5 years ago now, we've grown tremendously. So we have an engineering hub in Singapore as well in partnership with EDB. We got our DPT license about 2.5 years ago. And once you're more integrated into the fabric of the local community, the local industry, that also opens up additional optionality. Like we want to be good corporate citizens and give back to grow the ecosystem. That's something that I think a lot about, like how do we grow the digital assets ecosystem in Singapore? And so when Project Bloom came up as an opportunity, we were very excited about it. The MAS Fintech Infrastructure Office has done similar initiatives in the past. There was Project Guardian and Project Orchid. So I think Bloom is meant to be an evolution of Orchid, thinking about programmable money, but then going beyond. And so one of the areas that we've been investing into is this area of agentic payments. So we are contributing towards Project Bloom on the AI agentic commerce front. And it's very kind of frontier technology, but we think that this is a really meaty topic that will become important in a few years, that we're excited to participate under the MAS umbrella.
That's very interesting. I actually, before this, I must admit, I listened to a couple of your other podcast interviews, and I think agentic payments is something that I've heard you speak about as well. And I think it's so interesting because you're almost, of course, in today's world, it's a lot about it's around AI adoption, AI wave. But in the thing about it, when you incorporate that into payments and the kind of programmatic kind of capability you have with stablecoins, how powerful it can be. But we'd love to get your views as well, because ultimately we are in Southeast Asia. So in your view, what are some of the challenges that we have to overcome before we reach mass adoption? Or if anyone that's trying to build something in this field right now, what can we prioritize?
Yeah, I would say that agentic commerce and agentic payments has exploded a little bit onto the scene. And sometimes I feel like the industry is also just akin to overhyping some of it. So my best sense is that this is one of those classic, we're going to overestimate what we can do in the short term and vastly underestimate what this is going to look like in the long term. But the green shoots here really are that the first principles of this is that AI agents are becoming more empowered. We've moved on from just basic ChatGPT Q&A to having the thought over open cloth, like agentic actions that agents are taking on our behalf. And so the natural extension is that, okay, then how do we have agents pay for things, resources, commerce and whatnot on our behalf in order to achieve sort of these objectives we're trying to do, whether on a personal or on a business level. From there, it follows that for agents to be able to do these payments, because AI agents are internet and digital native, they need a digitally native form of money. And that's where we see this kind of symbiotic combination of AI agents being empowered with like crypto wallets funded by stablecoins that they can then go and, let's say, pay for some sort of a firewall resource or some sort of an API call that's a micropayment. It can be infinitely programmable, composable. That's in a machine kind of language understanding that like agents can manipulate much easier. The current flow of accessing APIs today is like a human goes and creates a login, attaches a payment method, and then goes and accesses. But that works for us, maybe, even that's a little high friction. But if you really want to unleash the power of agents, I think what we see is that they really have to be stablecoin funded payments. So on that front, what we've done is we've introduced this protocol called X402, which was written by one of our lead engineers. We have this kind of skunkworks division within Coinbase that sort of works on these things. We've open sourced the protocol. It's been incubated into a foundation along with Cloudflare. And it's basically just a simple open standard that's neutral, where anyone can just kind of use that spec in order to start instantiating payments that are driven by agents. So that's the first step. We're seeing other big companies jump into the fray as well. We're working with Google, with Stripe, with Visa and others, because I think we're all trying to work towards the same future, where the agents are this new economic actor on the internet. And the way things are going, there's one scenario which I think is probable, that agentic commerce is going to be bigger than like human-driven commerce in the future.
I think it's fascinating what you guys are building on the infrastructure layer to then invite more actors or participants to build on top of it. And if you think about it, a lot of times if we look at technology waves, new innovations in technology actually increases the overall activity and overall total addressable market of a certain industry, be it payments now, or you talk about in the space of wealth management and investments, when you have things moving from the brick and mortar space to the digital space, and then now to tokenization, you are bound to get bigger penetration and bigger activity from both institutional and retail. And fascinating to see what you guys are building there. But perhaps I think we move on into another area, right? Specifically around risk, right? While I think we've seen digital assets taken wider acceptance from institutions and mainstream as well. What are some of the biggest risks, right, for companies, for actually our listeners, right, traders, or their building, right? What are some of the bigger risks that they have to keep their eye out on as they continue this momentum?
This is an evolving, fast-growing area that is both technology-enabled and within a financial services perimeter for some of the work that happens. So I think there's a number of considerations that fall out of that. So for builders and entrepreneurs, what I would say is that depending on maybe what kind of a problem you're trying to solve and how you want to configure your stack, I do think that especially stablecoins around like areas of payments, cross-border payments, payouts, anything that really is going across borders in particular, has extremely high both product market fit and also just technology problem fit. I would encourage builders to really look at stablecoins again. The mix shift of payments flow between wires and kind of card funded versus stablecoins is really lopsiding towards stablecoins over time. So that network effect of origination and acceptance is being built out in real time. So it's something to pay attention towards and a trend that you can really write off. I do think that regulatory clarity really matters. So even in Singapore, there is a new single currency stablecoin framework that is being introduced and should come out hopefully sometime this year. That'll just provide further assurance that like stablecoins that you're using, if they're licensed under what could be Genius or Mika or Fear, you just have more assurance that they're fully reserved and they're backed by high quality liquid assets, and there's going to be attestations and audits and everything like that. So that allows you to put more investments and scale over time as well. There are, I think, other nuances that are less discussed. Things around like clarity around like tax positions. Then in Singapore, it's maybe less of a concern because capital gains is not so much an element of the tax regime here. But in many other countries, people are still grappling with this. If I convert a stablecoin back to the underlying, and let's say in the secondary market, there was like a 0.01 like differentiation. Do I now have to track tax for that? Or you also need like ERP integrations from an operational risk perspective of this is all going to flow through my existing system. You don't want to go and build out your back end. So all that work is being done. I think there are vendors in the market today that can help you achieve those. But those are just some things to look up.
Actually, on tech side, especially now today, people are talking about interest-bearing stablecoins as well, right?
Yeah.
So then you mix the security and the money alternative.
Yep.
And then that's where it creates some areas that we just have to watch out for, especially move in that direction.
That's right. And I think that's one of those things of you can choose to take on more risk, but you then just need to do the work to understand what kind of risk could be, not just regulatory risk, but it could be a liquidity risk, it could be some kind of other kind of enforcement actions that could arise if it's deemed to be like a collective investment scheme. I think those can maybe allow you to get ahead by offering it early, but then just understand what you're getting yourself into.
Yeah, exactly. But also bringing up a point you mentioned around audit trails. Right? I think the thing around stablecoins is only as trustable as to the point in which you are ensured that it is fully backed one-on-one, the reserves fully liquid and things like that. I think that's really key in the adoption of stablecoins and moving from the single currency stablecoin framework. We'd love to get your views on the role of stablecoins in driving wider usage. I think particularly Coinbase has a partnership with StraightSex, which is one of our portfolio company as well. So we'd love to understand from your perspective how this is perhaps playing a very important role.
So the way I would set the stage is that today stablecoins are at roughly about 312 billion at last count in terms of TVL. And by all projections, this is basically there's a secular tailwind here. It's going to grow by multiples over the coming years because of the increasing rates of stablecoin adoption that we're seeing. Again, in the US, now that like Genius has been announced, stablecoins like USDC, which are highly trusted, and once Genius is implemented, will most probably be Genius compliant. I think that just gives that institutions in particular that assurance that this is fully reserved, it's backed, it's audited, and all that good stuff. Beyond USD stablecoins, I think this is another exciting theme for builders and entrepreneurs as well, of this area of local stablecoins or non-USD stablecoins. So the thesis here is that today in the on-chain economy, USD-backed stablecoins constitute about like 98% of total stablecoin TVL. But if you look at traditional FX markets, USD is about like 65% of reserves and about 85% of like trading volume. So if you expect that crypto markets and traditional markets are going to converge, then the on-chain FX market and traditional FX markets are also converge to the same levels. And so by corollary, non-USD stablecoins should actually outperform USD stablecoins. The reasons for why that also should happen is goods and services are priced in local currency. And so as there's more cross-border flow, both on e-commerce and P2P, eventually, right now they're getting liquidated into local fiat currency. But as the circular economy becomes more stablecoin oriented, I think both users and merchants will just choose to keep it in stablecoin so that they can deploy it forward. So coming to StraightSex, I've known Tianwei, the founder, for a while. We were very excited about the potential for StraightSex's XSGD to be accessible on Coinbase Singapore and Coinbase Global. So we worked with them to strike up a partnership where we announced it at SFF last year of XSGD is available on Coinbase, not just Singapore, but Coinbase Global as a global order book. And then in Singapore, you can redeem XSGD 1-for-1 to SGD. So on the retail side for consumers, we'll just basically take away that friction of thinking about, do I have XSGD on my balance or SGD? So that's a starting point. We're excited to grow this partnership. But over time, we think about all the ASEAN stablecoins and beyond as becoming more liquid and more interoperable with better liquidity on these different pairs that can be done on the blockchain.
That's so important, especially if you launch a local stable coins, right? You need access for the retail or to participants in the whole ecosystem to be able to do that exchange. And that's where I think Coinbase is doing great work. And I love the example you talk about between the stablecoin, local fiat, and the stablecoin, how people are keeping it. And I think in one of your past podcasts, you mentioned this thing called a crypto sandwich.
For the silver.
That's right. I think that's very interesting because quite a clarifying mental model. Where in this case, it's like half a sandwich. It goes to a stablecoin and then it stays there, right? And then there's continued participation in the stablecoin economy.
That's right. Yeah. So it's maybe like an open face sandwich.
Open-face sandwich. Yeah. But zooming out a bit from StraightX, I'm sure our listeners also love to learn also for other fintechs, they're trying to collaborate with Coinbase, right? What are some areas of partnerships that they could look forward to with Coinbase? What are the areas of priorities that someone who is looking to work with you could think about?
So in Singapore, we're providing these regulated services onshore, right? So for consumers, accredited investors, and even now businesses, we allow you to on-ramp and off-ramp both Sing dollar and USD. We allow you to do send receives. We have great trading products if you want, but we also support USDC in a very meaningful way along with XSGD. So that gives us this very kind of interesting core set of features that you can use for different use cases. And then along with Singapore, we're also registered in Australia. We actually just opened up in India. We have a MiCA license in Europe, where we have licenses in Canada. We're open in Brazil. And then we're obviously dominant in the US. So we also have this big international footprint with both consumer distribution. And then we also have 30,000 plus institutions that are onboarded with us. So we're very fortunate that we have this scale within the crypto economy, and we get to have this two-sided distribution. We have a liquidity kind of marketplace as well. We have our own blockchain base, which is based. We have X402. So there's a bunch of these capabilities that we are excited to also just externalize and provide to different partners and clients and other kinds of businesses in the space. So when we think about partnerships, so there's a few different things. So one is that we have this product called Crypto as a Service. So that's basically a white label externalization of our core features that anyone can use if they want to light up different crypto features within their platform. So think of it as like a B2B2C product. So we've announced that with PNC Bank in the US, for example. There's a few that even regionally that are in the pipeline that we're hoping to be able to announce this year. So that's one. The second would be any other stablecoin issuers that want to launch on Base or eventually on Coinbase. We're always excited to support those as local stablecoin plays. And then for payments companies, we do have specific payment solutions like payment APIs and SDKs that they can use to plug into like an acceptance product where they can get access to our consumer distribution, all the stored balances that we have on the Coinbase platform, they can use for easy checkouts on their platform as well.
That's interesting because I think in the end of the day, Singapore is definitely a good base, and it is a place where there's high trust in the regulatory framework, and the regulators, of course, very forward-looking to drive more collaborations. But the broader South Asia that we live in, right, it's actually one of the most highly active markets with high crypto participation, where the young user or digitally native user, their first participation in capital markets is actually maybe through a stablecoin and cryptocurrency, and less of a local fiat. And that's very interesting because if you think about what you can build from there, right? Not only in terms of participation, in terms of capital, right? For a user in, let's say, Indonesia who wants to invest and wants to look beyond the local fiat kind of options. But also from a utility perspective. And I think that's testament to some of the amazing work you guys are doing with, again, I think Base in the region as well.
Southeast Asia is definitely one of the most dynamic regions that we see. It's a young, tech-forward population, and they've been very high and early crypto adopters as far as we can tell. Some of the interesting kind of themes that we've seen in South Asia over the years is, if you remember, like Axie back in the day.
Yeah.
So that was a really fun South Asia phenomenon because it was made in Vietnam and consumed in the Philippines. And for what it's worth, I was running like a gaming guild with some Filipino scholars. The people like earned real money. They had real mobility. Like my own scholars, like somebody paid for their mom's like hospital bills, somebody painted the walls in their house. Like it was just really a lot of like human heartwarming stories that came out of it. I don't think that the tokenomics were very supportive and sustainable. So it did implode a little bit at the end. But there's a couple of signals in there for me. One is, I think young people are telling us that they want access to financial services and they want to improve their lot in life by being able to move upward. And in many geographies, those options are just limited. In so many countries, like real estate is like the means of growing wealth.
Yeah.
But you look around you, like there is an affordability crisis, like in every country that we can think of.
Yeah.
Right. Not just Singapore, Australia has this acute thing, like and many other markets. And local stock exchanges are also not necessarily kind of, well structured, and there's not enough liquidity for big things to happen. So young people do want access to these global opportunities, and financial services are getting democratized, and crypto is just one instantiation of it. There's obviously a lot of other great work that fintechs are also doing. But one of the key things we've observed is that some of the action in fintech has shifted from the unbanked to the unbrokered. That's a really big theme that is going to be front and center for the next 10 years that we're excited to participate in different ways.
Yeah. I really like how you brought out the trends that's been happening in the region, because we invest in a lot of fintechs in the region, and a big theme is around wealth management. You see that actually for like Asian economies, let's say in Vietnam, the top of priority of people who save their monthly incomes is to afford a house down the road. And that's where you get a lot of the wealth accrual within property, as you alluded. And the other thing I like that you mentioned as well is this whole thing around moving from unbanked to unbrokered, right? Because what we see today, a lot of companies, a lot of retail investors, the offshore kind of fiat to crypto kind of activity is so much higher.
Yeah.
Compared to in the absence of a like regulatory license framework and players, then that's where you see that kind of disparity. But as what we see in the US, right, when you have clearer rules, better frameworks and regimes, you're able to increase adoption and you're able to provide a safer space for everything to happen as well. Yeah.
And this is one of the things that like a lot of people ask me of, how do I get started, or what should I do if I want to invest? And the advice I always give to people is there's a few different things that you should think about to invest safely. And the first one is you should look at like onshore regulated options. I think offshore exchanges may have their place, but in 2026, actually it's a lot safer, the whole system. And there's many safe onshore options. I think the second thing is you should just start with small amounts of money. I actually tell people to just start with USDC. You don't even have to really stomach the volatility if you don't want. Just get started with stablecoins and actually just send a few dollars here and there to your friends and see and feel what that experience looks like. And then if you do want to kind of go further, just start with Bitcoin. Because even if you look at like the crypto markets, there's still a lot of beta that is attached to Bitcoin. So you don't, and so the thing that I tell people not to do is, if somebody like recommends like a hot meme coin on your WhatsApp group, that is not the way to get it's probably not going to work out well.
Yeah, I think the further you distance yourself from all the DeFi talk and all the diamond hands or hold to the moon talk on X, right?
Yeah.
The easier your kind of transition and exposure, movement into exposure in this part of the world. And that's what we see with some of our portfolio as well, right? We have a company in Indonesia called Ajaib. They do like digital brokerage, right? And they launch crypto brokerage as well. To your point, also providing another option, because instead of just investing in local equities, I would want to hold part of my assets in a crypto, Bitcoin, or even stable coins for that matter. So I think we're seeing a lot of that in the region as well, and pretty excited how, for example, like FAST, right? You have the local currency stablecoin, but you also they have a large offline merchant acquiring piece with FAST, specifically in Indonesia, right? So the possibilities of using stablecoins to enable some of these cross-border remittance or peer-to-peer transactions, or even new use cases with programmatic money, I think that is something that is interesting.
Indonesia, I think, has more crypto investors than it does stock investors at this point. And I think we see the same trends around the world. The other interesting thing around here is that we've seen surveys that suggest that 87% of Asian high net worths have digital assets in their portfolio already. Even in Singapore, when we ran our own surveys, we see that more than 50% of accredited investors have digital assets. So I think that most people are like understanding where like an allocation towards digital assets like fits into their portfolio, but it's making it sort of weighted to retail portfolio. I'd say that if I were looking to maybe start something today that's VC fundable and you need something that's got scale in 3 years, I would keep building on the stablecoin theme. There's just huge tailwinds there that are like unignorable. There's massive PMF, and the TAM is basically all money in some way, shape, or form. So these stablecoin neobanks, you've seen a bunch of them now start to get into kind of unicorn territory, but I still think that we're in early innings. There's going to be many different flavors of stablecoin neobanks that service different types of users, both customer as well as like SMEs and merchants. So I think we're starting to scratch the surface there that I think is very exciting. I think if I were maybe investing or building something on a 10-year time frame, I would probably start on the agentic payments theme. It's still very early. I think the signals that we're seeing they're spiky, but the amount of like developer excitement and interest that we're seeing that's unavoidable, and I think that is going to grow. But I also think that we're going to go through a hype cycle with a little bit of a drop of despair, and then we're going to come out on the other end of it.
Exactly. I think thanks for sharing that. This has been fascinating. Thank you so much for spending time with us, and I've definitely have a lot of takeaways from today. I'm sure listeners have as well. Thank you.
Yeah, thank you so much for having me.